Welcome back to the Viperman channel. We're continuing our series on bear market strategies, and this is the more in-depth look on how to read a chart. I know it's kind of boring, but this is the stuff that you need to understand in order to kind of understand where price is going in whatever asset you're looking at, but also for moving forward as we go through looking for other passive revenue incomes within the crypto space. So this is not financial advice, so please use your own broker financial advisor to do this. This is just how I do it, so if you can glean something out of it, that's great. And at least maybe have a couple questions or understand what your financial advisor is talking about. I want to appreciate everybody who subscribed. If you can continue to subscribe, hit that like button and the notification bell, that'd be awesome. And let's get started. So I'm going to start with just a simple basic chart of ETH. This is the track 2 of that series. The more in depth, we're going to look at BTC because that's what we looked at in track 1. But I wanted a clean chart, fairly clean chart, to understand what we put on the chart or what I put on a chart to understand what's going on in the market. Okay, so you'll notice 2 sections in the chart. You got the price section, and then these are called the lower indicators down here. Okay, so let's start on the top. We always use candlesticks. Most charting systems, when they default out in Coin 360, CoinGecko, LiveView, anything like that, they usually start with a line chart, and it's kind of useless because it doesn't give you enough information. Okay, so let's start what a candlestick is. I know this is going to start. This could be basic for some people, but just skip forward in the video. So I'm going to blow this up so it's nice and big. I'll look over here. Yep, I can see it. Okay, so, and let's find a good example. Here we go. Okay, great. Okay, so we're going to look at this red candle here. Now, red obviously is a down day, green is an up day. And you can program your software to be solid or any color, actually, if you wanted to. Some people use tradition. Some of the older people that have been in the business for a long time will use black and white. But I have a color screen, so I like color. So red is down in my chart. Green is up. So a candlestick, depending on the color, up or down, depends on where the open and close starts. Okay, so on a down candlestick, the open is here. Right here. So this is, I'm looking at December 3rd of last year. And so the open is 45.8350. Whoops, sorry, my mouse drifted there. 45.8350. And it moved all the way down to here and closed at 42.1330. Okay. And if you look over here, you can see the daily. We're on a daily chart, so that's day, that's the open, that's the high, that's the low, that's the close. Okay. These little sticks, or what's really what they're called, are candle wicks. So these little wicks are the direction in which, so we actually price, when it did open, at some point in time during the day, because it's a daily chart, if this was an hourly chart, this candle would represent 1 hour. But this is a candlestick wick to the upside and to the downside. So we actually traveled as high to here and as low to here, but we closed here. Okay, so we opened here, went down, and we closed here, but we traveled this distance. Okay, and on a green candlestick, or candlestick. So this wick, notice how long this wick is, right? On a little top wick up here, but we opened here and we closed here because we closed higher. So the open is here and the close is here. Now, if this was a red candlestick, this would be the open, and then we have a close down here somewhere, okay? And anybody understands patterns, or we'll get into patterns and what candlesticks mean, this is actually a hammer. And if you can tell, it's like here's the handle and here's the hammer part, right? You always have, you can either have a little notch there or not based on your hammer, right? So that's how you read a candlestick. So on a green candlestick, open, close, wick, wick. And the wicks can be any size, okay? They can be real tiny, they can be real long. The body could be any size as well. The body could be almost indistinguished between open and close, okay? And sometimes there is, the close and the open are the exact same price, okay? And so on a down candle, this would be the open, this would be the close. These are the wicks, okay? So if you need to look at that further, pause the video and look at that. Now, while we're here, we need to talk about what's a high and what's a low, okay? So a high is a price that's, we're considering the high and then the low, right? Kind of simple, high and low. Those high and lows help us, one, graph trend lines, and it also helps us find resistance and support, okay? So what defines a high and a low? So let's look here. Now, when we look at a high and low, the color of the candlesticks don't matter, okay? However, what we are looking for is the wicks, or in this case, if it was a full body, it could be all the way up to here, that this wick is higher than the last two candlesticks to the left and the last two candlesticks to the right, okay? Which this is. So if you use your crosshairs on your mouse, you can put that there and look and, whoops, and see that that high, this wick is higher than these two and these two, okay? So that's a high, okay? So let's find a low, which would be the opposites. For every pattern, for everything in a chart, there's an opposite. There's a bearish and a bullish, okay? So a low, let's look at this candlestick, right? We got 1, 2 to the left, 1, 2 higher than the low, right? So this would be the opposite, right? So there'd be 2 to the left higher and 2 to the right higher. So this is a low, okay? This would not be a high because, yes, it's higher than this one, but not as high as this one, okay? And these two are definitely higher than this one, okay? That's how you determine a high and a low. So let's scroll over here. Oh, that kind of gives it away, right? So this is your 52-week high. That's what that bubble is. So see how that's, put your cursor there, to the left higher, to the right higher, right? So where's a low at? Where's a nice low? How about right here? Right? You got 2 to the left that are higher and 2 to the right that are higher. So that's a low, right? Let's put some of that to work. Okay, so we were over here. So obviously this is a high, the 52-week high. And here's our 52-week low. Now you'll notice, and also on the BTC chart that we'll look at here in a second, there are 2 dates here. These are weekends. TD Ameritrade had some issues with the data coming in. I'd have to correct manually each chart, and I just didn't feel like doing that. So these are bogus. Don't even count these. These don't get counted. Okay. The trend lines do take an effect a little bit, but for what our purposes, it really doesn't matter. All right. So, like I said, highs and lows help you with trend lines. If I can get my cursor to go here. So when you draw a trend line, which is a very useful tool, okay, in basic charting, is that you need 3 points, 3 touches of a high, okay? So if I draw this way, I kind of get a chart, a line that goes that way. It really doesn't do me any good. I only have 2 points, right? So I really want to start on this one. And I'm going to touch that. Oh, no. How about these 2 highs right here? So here's where you got to make a decision. And this is kind of how experience and your gut kind of mix in together. You can draw what's called a very fast trend line, and you can put that like that, or I would personally draw a little bit slower of a trend line. Now I only get in 2 spots to go in my touches, which is not to the rule, right? So I would then take this. So that's I would call that my slow, and then I would make this my fast trend line. And I'd draw something like that. Now notice the difference is not that much. The delta between here and here. But I probably, in my experience, and again, this is not financial advice. Won't let me select. Come on. I'd leave my trend line like that, to be honest with you. That's how I would do it. Okay, because we know it's a downward trend. It's going from the upper left to the lower right. Okay. Now, what the highs and lows also provide us are support and resistance. Now, a trend line could act as support and resistance as well. Okay, and the way that works, let's get my price here. So as price continues downward, right, this becomes resistance. This trend line becomes resistance. So it's going to be harder to break that trend line. Okay. The theory behind that is, and the reason why you want 3 touches is because you're looking at highs, and the way we're going to draw our support and resistance, you're going to understand that a little bit more. So what you're going to look for is, for support, you're going to look for lows. So we know we got a 52-week low here, so we're going to actually start with that one. So there's a 52-week low. That is support. So price is going to have a hard time breaking that. Now the question is there more support somewhere between this low and the current price? And there is, right? So here's this candlestick. As I said, we got our 52-week low here, and then we do have another low right here, right? We have 2 to the left higher and 2 to the right higher. So we can draw our support right there. And if you look, price has been trying to break, but it's got support right here. So price comes right back up. So what that means is that there are people out there that are willing to buy the price at, around this. They're willing to buy here. So the price bounces off and tries to move higher, okay? And now, typically I try to get 3 support levels and resistance levels, but because we're only looking at this little tiny part of the chart, we're gonna go with 2, okay? So resistance would be the opposite. So we're gonna look for 2 spots where it's high. So there's a high right there, right? This red candle here, to the left or lower, to the right or lower. So we'll draw our line there. And we're going to go back in time. And here's another one, right? To the left, to the right. And then what we're going to do is we're going to make this green. Make this green. Because if we break that line, go above it. Oops, how come I didn't turn green? Did I not do that right? Green, green. That's positive. We're going up, right? So that's good for us. And these are, if price drops below, it's negative, right? It's not good. It's, well, and I guess that's depending on, so if you're looking to buy it, you want it to be going down to a point, right? So you might want to look at saying, I might want to put half my position on here and then my other half over here. Not financial advice, but could very well work out for you. Now, what you have is prices in here and it goes in between, right? So I'm going to date myself, but if you had a Super Bowl, remember that back in the day you had a Super Bowl and you bounced that as hard as you could on the floor to hit the ceiling? Well, the floor is the support. It hit the floor, it got support, and then jumped and hit the ceiling, and then didn't go through the ceiling, came back down. Now you throw it hard enough, in theory, you could break through the ceiling or actually the floor as well. So it all depends on what's happening. So that's support and resistance. So this is the support where you're bouncing the ball, and this is the ceiling where you're bouncing the ball. Now, I want to bring to your attention, notice the trend line here. Let's make this trend line a little bit bigger so we can see it a little bit nicer. Nice and fat trend line. There we go. All right, so as the trend line's coming down, you can see it's intersecting with support here, or I'm sorry, resistance here, right? So again, the back side, the front side of this trend line is resistance. The back side of that will be support, right? So if it breaks, price were to break up and go back above this green line, this red line, the trend line becomes support as well as the price line here. That's resistance becomes support. So whenever you break a line, the opposite happens. Okay, so resistance becomes support, support becomes resistance. No, I'm sorry, support becomes resistance, and resistance becomes support. Now, the next thing I want to look at is a couple moving averages that are on here. And you'll see a purple, a green dash, and a orange line. And they correspond right up here. So we have a moving exponential line, and I don't use a simple moving average. I use an exponential moving average, which a simple moving average takes whatever period is. So if it's 10, it takes the 10 prices and averages them equally weighted. So it takes 10, add up those prices, divide it by 10. That's a simple moving average. An exponential moving average takes the last couple candles, whether they're days, hours, minutes, and puts more weight to those, okay? And you can set those up as well, okay? So the orange is an 8, which is a fast-moving trend line. The green, you can see here, it's a 50-day, and the purple is a 100-day, okay? So this counts for last 8 days. So it'll be 1, 2, 3, 4, 5, 6, 7, 8. And then the green would be for 50, and then the 100, okay? So these are smoothing out. So what I look for is the orange being the telltale sign of price moving, okay? So I looked and say, you look at this orange, it's going higher than the green. Look, price is going higher than the green, right? It hasn't rocketed higher because it hasn't crossed the purple line yet. And then you can see it coming back down. You can see prices, it's signaling that price is coming back down. Dash line is a T3 Tilson indicator, which kind of takes the best of the three moving averages, and it kind of gives you a really good track on how price is going. Okay, so there's two ways to play the T3. You can either anytime price crosses it, that's the direction you want to trade. And so if you go back to here in the corner, upper left hand corner here, you can see price, this red candlestick crossed, and don't count this candle, and then crossed and stayed below again. You can play it that way, or you can play it with the orange line as well. So once the orange line crosses, so what you see here is it doesn't cross until after this close. So we got kind of like confirmation that things are going the right way. And that's how you play those. Now, it's not perfect. You got one indicator, okay? What we're now looking for is 3 confirmations, okay? So these moving averages are 1 confirmation. The support and resistance lines can be a second confirmation, but I like personally, and again, not financial advice. You guys need to figure this out on your own and make your own strategies. I'm just here to give you ideas, okay? I like to look at 2 on the chart. So that would be my moving averages and my trend line / resistance support lines, okay? Then I like to look at volume. Volume speaks volumes. No pun intended, but it really does. Okay, so now if we look at, let's look at this date right here. On August 19th, we had a nice down day. It crossed our orange line, closed at our orange line, and closed at our T3 Tilson. It had a lot of volume, but really not a lot in general. So the volume that most charts start out with is a normal volume chart. So think of this all being the same color and no lines and just the candles on here. I changed mine to a volume average. Okay, so it gives me the volume, but then it gives me, and I set, you can set this to anything you want. I found a 50-day moving average volume is really good. And then because I also trade assets in the futures, and this is a futures contract technically on Thinkorswim, I leave open interest, and we'll get into that as well. So we're interested in this orange line, beige line, taupe line here, what do you want to call this? I kind of call it builder gray. If you ever built a new house, that's kind of like the color that taupe color they always put in the house, if it's not white. So what we're looking here is, did volume break above the 50-day moving average? And it did. Like, so for example here, so this was a strong move, okay? Even though the candlestick's not that big and the price wasn't that move, there was a lot of buyers in here, okay? Same here. You go down here, a lot of sellers, a lot of buyers, a lot of sellers, a lot of sellers, okay? So this is kind of telling of what's going on. And then I call it the fuel gauge. It's a stochastic, but it's right out of the box. I haven't really tweaked it all that much. It's an 80-20-20, 80-20, and then 25-25. So the 80 is the percent in which it moves. So it's 20. So that, in other words, this cyan line here and this cyan line here, this is 20 at the 20% level. So this is from the bottom to here is an 80% move. From here to here, it's from the top to this bottom line here is an 80% move, leaving you 20% here and 20% here. And I'm going to just draw a Fibonacci real quick so this way you can see what I'm talking about here. And so when you draw a Fibonacci, there's 4 points to it. There's an A, a B, a C, and a D. So the A to a B is we're looking at right now is a downward trend, since that's what we're looking at in the bear market, right? So this is point 1 to point 2, or A to B. This is the high and low of the cycle that we're looking at. Then we're going to look for a retracement, which is our C. And then depending on where that C goes, where that retracement ends, it determines where our endpoint is. What's the price target? Okay, that is in a nutshell what a Fibonacci is. Now, Fibonacci's are, a mathematician was named Fibonacci, an Italian mathematician, and he came out with what determined mathematically predictions of distance, I guess the best way I can describe it, within not just what he was looking at as drawings, but anywhere on Earth. A pineapple has Fibonacci's. The Mona Lisa, the reason why everybody likes the Mona Lisa so much is because it's Fibonacci the perfect face. So it's either male or female, depending on how you look at it. Even us as human beings, we're attracted to people's faces that have a Fibonacci that's closer to the Fibonacci range. The Rocky Mountains have Fibonacci peaks and valleys. It's everywhere in nature, absolutely everywhere in nature, and it's also in charting, because we as people are the ones buying and selling the charts, and whatever it is that somehow we come up with a Fibonacci sequence. And so what I'm going to do here real quick, let's see if I can, let's go here in a Fibonacci. Just a quick, what is a Fibonacci sequence, okay? So if you start counting the first, so you start with 0. 0 plus 1 is 1. 1 plus 1 is 2. 2 plus 1. So you take the next sequence, right? So if you look, so your sequence is 1 and 1, or the form of 1 and 2, and that's kind of how you start out, right? So 2 and 3 is 5, and then you go back, so 3 and 5 is 8, 8 and 5 is 13, 13 and 8 is 21, and that's the sequence. And it's everywhere in our reality. It's even in the cosmos, right? So let's get back to our chart. And I'm going to draw a Fibonacci here. All right, so this is our A. We're going to come down. There's our B, and that's all you're going to do. And then, so right here, so this is actually at a little above a 5.0, and then this would be the D. It was actually pretty accurate on the, just kind of guessing where the drawings should go, because they look right to you. It's just how you perceive nature. All right, so what is this, right? So what we're going to do right now is we're going to edit this property so you can see what this looks. This is highly altered to what comes out of the box of any trading software, okay? This has been fine-tuned by different individuals and companies, and that is from Forex to options to stocks, and this is kind of where I kind of play around with it a little bit. And this is almost direct opposite of what any other software would show you. This would be all positive numbers, these would be negative numbers, okay? So, and then I color coded these for you, okay? So if I can move it. If this is our A and that's our B, that's 0 and that's 1. Now 0 and 1 change depending if you're going negative or positive on the chart. So we're going negative, so we're going to go, the 0's on top and our 1 is in the bottom here. So 382, 50, 618, 786, and 86 are our retracements. You'll notice 886. The 7 is not showing because it's too small. 618, 50, 382, and that's our 1 and 0. Okay. Then we have the extensions 18, 27, 618. Okay. And you'll notice that's our extensions here. So these are our extensions. I color coded these. So the retracements are in red. Okay. The most common retracement is 618. That is the holy grail right here. Okay, 618. If it's a 50 or 382, 50 is kind of real close to the 618, but 382 means we're going to be fast and shallow in our extension. The negative 18, 27, and 6 are our extensions. So we match up red to red, yellow, blue to blue, green, and then green to green. Okay, so if we get an 86 and 86% retracement, we're only looking for an 18% follow through of an extension. And same with the 76, and we'll get 27, and then 618 is a 618. That's where this is the holy grail. Like I said, this is the most common, probably 8 out of 10 times. That's what you're going to get, or close to it. Okay. So if we were to draw this on this ETH chart, for instance, we would start here because we got a high, our 52-week high is here, and our 52-week low is here. Now, on a daily chart, a lot of traders will draw, and it's not even our way that I have. They will draw it this way. Okay. That doesn't really give me much of what's going on. It's very long term, it does give you, if you look, it does give you a 618 retracement, right? But really, I want to see what's going on a little bit closer in the home, okay? So I am going to go here. And look, we have a 5.0 retracement, okay? And a target of 457. So a lot of people saying that, you know, ETH is going to go down to 400. It's very possible. It sure looks like it, right? Now, to get this most accurate, I would have to pull these two candlesticks out, because these two candlesticks do affect the Fibonacci. But for the most part, these two, even though they're big, are affecting it, but not greatly. But that's how I draw Fibonacci. So let's go to BTC now, and let's put all this together. So I drew my Fibonacci's from here to here. And if you can almost tell ETH is following BTC, right? It's when it's got kind of the down and dirty, down, and then comes back up and comes back down. But what you see more in BTC is more consolidation, okay? So we have a retracement just above the 382. We don't have even a 5.0 retracement. So we're looking for a pretty fast move down. And we did get that pretty fast down, and then we consolidated. Now, consolidation is sometimes really good because you can place consolidation. Let's see if I get this to, I can't. So if you look at this green line and this red line here, we have consolidation. We have a consolidation channel. The darker orange versus the lighter orange, these are resistance, these are support. Okay, we have a trend line, and the trend line actually is nice because it has multi points going down. Okay, and we're currently down here now. If you could imagine, and let's see if I can get, if you can imagine this being like a wedge, right? So let's see if I can, right? Let's see if I can get just a color out for us. Yeah, that's not going to be a tough part because it's right there. All right, so if I move this to 5 and we move this to purple, and we take this, do the same thing. Let's see if we can get a hold of this red one right here. Move it out to purple. Dash it. 5. All right, so look at this wedge, right? We got a nice wedge. So price has been coming through here and it's getting tighter. It's consolidating, right? So it's going in, it's going in, going in. We're almost there. Now, if you look at the track 1 video, it was unfortunately a couple days ago because I did it, the hurricane came, and now it's post-hurricane. So it's been a couple days. When I originally did it, price was like right around here somewhere. Let's see, today's Saturday, Friday, Thursday, Wednesday, Tuesday. I don't know if I did that on Monday or Tuesday. The whole week was a blur to me because prepping for the hurricane and everything else was just go type of scenario. But anyway, so it's been a couple of days now, and we're actually to the point where we're going to have to make a decision from a consolidation standpoint, right? We're compressing price, so price is going to have to do something. It's going to have to go up or it's going to have to go down. Because we're in a downward trend that kind of suggests that most of these patterns follow the trend. Okay, so we very well could break into a downward new compression. We could come from here down into here, right? We could be in here, and we could be bouncing and compressing here. We could do another wedge, right? And to be honest with you, that's what I think is going to happen. Now, it's not financial advice. I could be wrong. I could be right. I mean, only time will tell. Because if I look at my Fibonacci's, look at where, if I compress down here, if we do another channel, we compress, our Fibonacci is right here, right? Here's our Fibonacci range right here. There's our Fibonacci. So we could come right in here. We could spend weeks in here, right? Boom, 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 and come here. Maybe even to the end of the year. I mean, if you look from here, this triangle was from June, middle of June to now. I mean, that's months, right? We could spend months in this next channel before we actually hit our Fibonacci. At which point, we hopefully break the downward Fibonacci. We could very well just set another downward Fibonacci. I hope not. But we would have to, in order to do that, we would have to come through here, and our next, so we would reverse the Fibonacci if that was the case, right? So A, B, C, D, so D, C, and D become A and B. So we would be up here to here. So we're going to have to hit that and then go back up. And then we would need to go above this A. I'm sorry, this C, because this would be A, B. So this would become the new B. So we would need price to move some 80%. Okay. It's a big move on a daily chart. Now, the thing is that when you're trading and or trying to figure out what your short term, like, so if I mined a bunch of stuff to Bitcoin, I would use a chart that was more, say, a 4-hour chart. And then that would give me, notice how you're getting more data inside the chart, but you're still following the same patterns, right? But your Fibonacci's might be slightly different, and you might have a Fibonacci which is inside a Fibonacci. In a 4-hour chart, you may not, but in an hour chart, you definitely will have multiple Fibonacci's within that main Fibonacci for the daily. And even from a daily to a weekly, you would have more Fibonacci's between the weekly and the daily. It gives you opportunities to trade and or sell what you mined at the higher point of that window per se, right? If you're not going to hodl. All right, so that's pretty much what we're doing here. Okay, the next episode's going to be merged back together because we've all got this training now on what I look at from a chart standpoint. I encourage you to go ahead and look at getting a charting system. There's a bunch of free ones out there. You can even download TD Ameritrade. I'll put a link down below for you. If you use the link, I believe, because I can use a friends and family thing to where you get, at least they used to. I don't quote me. I thought they used to give you so many free trades. Now that it's all free trades anyway, I'm not sure exactly what they're doing, if they're doing anything, but I'll put a link down there for you guys. I get nothing out of it either way. It's just to help whoever I decide, to give out the link to. But you can play with paper money, which what we're doing in here is because we're going to set up a portfolio as well to see how, not so much to say, hey, this is what we're going to make, but just kind of track Bitcoin and ETH and maybe Litecoin and some other things. And there's a couple correlations between Bitcoin and like the US dollar, the Aussie dollar, the euros, things like that. And this way we can track everything and put it into a grid. It'll be a lot easier to read and keep track of. But we'll do that in another video. So if you wanted to follow along, you can do that with Thinkorswim. And then you can use the paper money, which it's free, and you can keep it, I think, for a year without even funding it or even giving out all that much information. And then if you don't fund it, and I think all you gotta do is fund it with $10, you can just re-up again and get another year out of it. But it gives you full-blown charting, which is really nice. It's one of the few brokers I know that do this. And it's real time. It is actual real time. So if you actually simulate a trade, you actually simulate like if it was really in the market. So it'll pair that up against a real trade. That's exactly what yours is. And then when that gets executed, you get executed. So it really kind of gives you the real feel what if you're really using real money. And you can actually set the dollar amount as well through the settings. So you can set, so like if I want to just use $1,000, I could put $1,000 in that and I could trade it like I was going to, right? And it helps you understand what your emotions are and everything else. Trading and investing, there's a lot of emotion and you really need to take the emotion out. That's why they actually, believe it or not, they actually say women are better traders than men. For some reason, women don't get as emotional as a man would. I don't understand it. I'm not a psychologist. It's just what I've read in every behavioral book for trading. But I think it has to do something. What I gather is that men try to fix things. And so we see a trade going the wrong way. So we try fixing it and then we end up screwing ourselves up. It took me a long time to learn, leave it alone, trade your plan type of thing. So anyway, if you guys can please hit the subscribe button, notification button. It helps with the algorithm for YouTube. We're trying to grow the channel. If there's something that you want me to look at, please leave it in the comments and I will try to address it as good as possible. And also we're going to be looking now at some nodes and stuff that we can do, some really inexpensive ways to make some additional passive income. The idea is to have multiple revenues of passive income coming in the door, so no one thing is going to make or break you. It's a collective that's going to make you, right? So we're going to look at nodes. I am experimenting right now with a couple different options, and unfortunately, when you set these up, they do take some time. And I'm trying to source some hardware that's inexpensive, and I mean inexpensive, to be able to do this and kind of get you in the right path and direction if that's what you want to go and do. And then you'll have to figure out, A, do you have the resources to do this? Do you have the internet connection that's reliable enough? And then even if you don't, there are other options that you can do, and I'll show you how to do that as well. There are options in which it's a whole lot faster to do, but there's a cost associated to it, right? It's no different than like if you go grocery shopping. If I make the cake, it costs me this much in ingredients. If I buy the cake, it's going to cost me more because I have the convenience of somebody else doing it. And that's the same thing here. So either you bake it yourself or you're going to have somebody else bake it for you. But there's either way is a good way. Sometimes if you don't have the technology background and how to do some of this, it's a little more difficult. But I will say most of the documentation is pretty good. Some of it needs to be a little bit better, and we'll go over that as well. But please be safe, be profitable as much as you can, have multiple revenue streams coming in, and if you live in Florida like I do, gosh, I hope you guys survived the hurricane as much as you possibly could. We did take some damage here, but nothing like down in Fort Pierce and that. Those guys are just devastated out on the East Coast. Looks like a war zone. I've been in war zones and those looked horrible. And my prayers go out to you guys that are out that way. And those in North Carolina and South Carolina that are getting hit again as well. All right, guys. See you on the next one.